Katherine, this is definitely going to be the least evergreen episode we've ever done. The stockings in the background really put a timestamp on this one.
See, this is what happens when you don't have those fancy background images. You can filter things out. So this is the real me today. That's right.
I think this was just your way of making sure we published this episode in 2022. You didn't want me to put it in like the hopper and pump it out in February or something.
That's exactly right. Make it happen.
Well, it is a pleasure to talk to you today. And, as we talked about before we started recording, this market is moving fast, and it's forcing all of us to make a lot of decisions and be very intentional with where we make investments and the cost structures of our businesses. And it's really been like the recurring theme with a lot of the guests we've had this fall. Even if we don't intend to talk technology, we start to get into technology investments, and couldn't think of anybody better to dive deeper on that subject than you, Chief Digital Officer, Assurance Financial. Thrilled to have you.
Thank you. So happy to be with you. Yes, under difficult times for sure, but happy to be moving the industry forward. And it by far is the number one conversation for the C-suite when they're out and about.
Yeah. So let's get into, before we kind of go into tech, give us a snapshot of Assurance. We'd love to kind of get a glimpse at the go-to-market strategy and the size. So our audience can kind of put some context to the conversation about resources and technology.
Sure. So Assurance Financial is based out of Louisiana. We have about 21 branches in maybe 10 or 11 states now. We are a very organic growth sort of company. We're a little more reserved, a little more conservative. And so we closed around $2 billion last year. We'll close just under that this year. We have around 120 loan officers, and we probably have some of the longest tenured loan officers in the industry. It's a very, we call ourselves the people. We very much are about who we work with and not just the bottom line, although certainly it's expressed more this year than ever to get to profitability. But no doubt about it, the leaders of this company who've basically been here together from the beginning have done an excellent job of navigating turbulent times and very good ones as well.
Interesting. So, and you came into this role of Chief Digital Officer from a marketing background. How did that marketing background kind of influence the trajectory of your career, and why did it qualify you for this very digital innovation and transformation focused objective path?
Well, this is, again, where these leaders, Kenny Hodges as the CEO, was so smart, because if you think of it from a mortgage perspective, it would not have qualified me, right? How can I create an end-to-end solution for, let's say, the loan officer side, or even the journey for the customer side, where I don't even understand the product and what the path is, right? What the typical path would be. But what happened was I was in Baton Rouge. I had a small agency of my own, and I was looking to, get a group of clients. I had just recently moved back there from coming in and out of the country from Dubai, actually. And
Dubai? What was the...
I got married briefly.
Okay.
I got to live in Dubai for a few years. It was fascinating. Absolutely. Just incredible times. My daughter graduated high school from the American School of Dubai, and, just fascinating. But before Dubai, I was actually in San Francisco for 20 years. So that was the first days of startup. I mean, right in the very beginning of that, I worked with every startup that never found funding again, but the good thing about that is that as every next technology became available, every user experience, I'm talking from the early days of where do I navigate a website? Should we put the navigation at the top or down the left? And the very beginning of measuring analytics, where we could say, it's not just whether or not they visited the site, it's whether or not they stayed on the site. Was it sticky enough? And then certainly, was there a conversion? Very early days of web analytics. And so that brought me to a number of agencies. And of course, retail was fast and furious. And I had a number of retail clients at an agency I was with, the Victoria's Secret days and all the big Zappos shoe companies and things. But as financial services, which is traditionally more laggard in adopting technology in general, got on board with conversions online. People thought you were going to have to go into a bank forever to open a checking account, trying to get people. So from the very beginning, this was why I knew I wanted to be in financial services, because the journeys are so significant, because the consequence is so much greater, right? If you ended up buying the wrong pair of shoes, or you booked the wrong trip, right? That consequence is navigable. Everybody can handle that. But in financial services, there's a big consequence. And so just the expertise of my digital background, I felt really compelled to make sure people didn't struggle through something that was so incredible, that was going to change their lives. In my young days, I was on the tech team for Wells Fargo in downtown San Francisco, and very enthusiastic about it, which most people were not. I mean, look at our industry now, right? Most people are not enthusiastic about tech change. And they wanted me, which I did for a couple of months, until my ego was bruised like 1,000 times, to stand in the long lines on the 1st and the 15th of the month when people held their check in their hands, that was their one transaction. They would wait an hour and 15 minutes to just do a check transaction, right? And I would say, would you like me to show you how to do that in the ATM machine? And they were like, get away from me. I'm never putting my check in a machine. That was just being screamed at for days. But the few that would say, okay, well, if you stand right behind me, I'll do it. And these were not old people. Don't get me wrong. This was everybody. Okay. So I would go to the machine and I would, hide while they push their pen in, and then watch the wow of their eyes when that check went through the ATM machine. So that shows you how old I am and how long, I've been doing this. But
don't put too much emphasis on that. I did the same thing. My first job was I did retail bank, teller, customer service officer, had to help people with their checks in the ATM, stood in the lobby to reduce lines off the teller window. Boom, done it. Been there.
That is a riot.
But I was on Madison Avenue in Manhattan. So I was helping people with really big checks who still didn't like to use the ATM.
Well, this was Market Street in San Francisco.
Okay.
Same. This was the big, huge, marble column Wells Fargo Bank, standing there. Same thing. Isn't that something? I had no idea.
Yeah.
So that's the answer to the story, to be honest. I mean, going back on the journey, realizing we were trying to train the team internally, certainly the branch managers and even the teller line, how to use the ATM machine in case someone asked them. Then when you started asking the customer their experience, you realized everybody had to transition and there was no way out of it. I think back then, if someone came to the counter to deposit their check, that one transaction cost the bank around $2.64. If they put the check through the ATM machine, it was 8 cents. And so it was a no-brainer. It was a mass push. That's when they started putting banks into grocery stores, and how condensed can we make all of these
and creating spaces? Financial incentives for direct deposit. If the ATM costs 8 cents, direct deposit is even less. And so might not be a revenue center, but it certainly becomes a massive margin impact.
You are exactly right. So think about that. That right there, that direct deposit is what the beginning of the analytics for financial services started to make people realize the real power of technology in offering these types of things to consumers. Because if you could get a direct deposit, get your mortgage, and do an automatic transfer out of your checking account to pay for that mortgage, the stickiness of that customer, it wouldn't matter how bad the service was, how overdrawn the account, how many fees, it wouldn't matter. They're like, oh, I cannot go set all of that up with another bank. I mean, my mortgage gets paid out of it. I have to stay at this bank. And so that was another reason for getting customers, you're exactly right, engaged and rewarded for using technology.
That's interesting. So, all right. So we're both coming from this depository background, but we all know the industry has changed a lot in the I won't say decades, in the recent years. We've seen this massive shift to the independent mortgage bank, and Assurance being a mortgage banker. How do you take some of those depository learnings about customer service and the technology innovation and apply that to where the market is today, with a much larger emphasis on the mortgage bank versus the depository as the distribution center for mortgages?
Yeah, good question. So definitely taking both journeys to heart from the very beginning. I don't choose a single tool or a path to using that tool that only benefits the loan officer or only benefits the customer. There are more bells and whistles, as you know, out there, the $5 billion a year for the last few years that were put into fintech. Sort of the last big opportunity for these private equities to make a bunch of money on technology was in financial services, and largely mortgage was a beneficiary of that. And so there's so much you could buy and add on and glue on. But the point was that there is a core competency of knowledge from the very beginning of acquiring the user. So you have Google Analytics, right? All the way to the very end of selling and the acquisition of that loan. For us, we only service about 30% of our business or so. So the acquisition of the loan outside of it. And so those early findings definitely helped me recognize everyone's going to struggle. And so we broke it into 3 markets. And I said, here's how we're going to do it. There's market 1, market 2, and market 3. That's going to be our grand plan. Market 1 is the internal team, all of the employees for Assurance Financial. Market 2 is our partners, all of our realtors, our appraisers, anyone who spoke about us, you would be a partner. And then market 3 is the market. And we would never want, as we go through these dramatic changes of now you can apply online, and through COVID, now you have to apply online, right? For the market to tell the realtor, oh, this is the company you want me to use. Yeah, they have that nice new online application. And the realtor go, oh, I don't know about that. So just go talk to my loan officer, right? We want your partners to know before they're dealing with their clients. And same with the internal teams. I mean, we're in 11 states, right? We need to get all new messaging out to our own team before a realtor comes to them from some big campaign we ran and says, hey, heard you have that new fancy point of sale system, right? So we were very cognizant of the timing that we release each new endeavor from the technology side. The difference, to wrap up that question, is that today, the surprise and delight of, oh, I can do this in the ATM machine, or I can just pay my bills online. The surprise and delight is largely gone because the expectation is like, I just did this on Amazon this morning and I got my package this afternoon. It's like, how fast are you getting this? So we are really playing massive catch up with the expectation of the consumer when they go to a digital experience. If today we were still doing this in person, they would have more patience, right?
But you started the conversation with talking about like, hey, if you screw up a Zappos order, or like if they accidentally sent you skim milk instead of whole milk in your Instacart order, like no big deal. You correct it. Your week wasn't ruined. Your financial life wasn't ruined. And like, as we take this expectation that's being set by Amazon and others, like we're still talking about relatively inconsequential commerce experiences where the purchase of a home, it's not completely irreversible, but it is one of the most impactful financial decisions that consumers make. One that can make and break not only like their making ends meet each month, but their long-term wealth creation. So how do you get the importance of the transaction to flow into the consumer's willingness to invest time into the mortgage process?
So this is the whole point. There shouldn't be a mortgage process.
Ooh.
Right. So those of us who have already transitioned the travel industry and the retail industry and education, right? Those of us that already saw this, one of the first large jobs I had in financial services was with Select Quote Life Insurance. And they were betting on the fact, also very visionary people. Charan Singh was betting on the fact that people would go online because they had all these online visitors, but they had this terrible, one of the first websites that ever came out. But he said, I think people would, but it is the most personal thing you'll ever do. It's the one thing you'll buy, life insurance, that you will never benefit from. Right? Your kids benefit from it. Your live spouse benefits from it, but you're going to have to get your blood drawn and step on a scale and go through this whole hullabaloo, and you will never see a dime of that effort. Okay. So people will never do it online, but I think they could. He was confident, and boy, was he right. Because when we got efficient and offered a really good, quick, easy solution online, which was largely an application, they were just blown away that people didn't care if they ever met their door-to-door life insurance person again, right? Select Quote was already doing great business over the phone, call Select Quote, the 800 number on the screen. But when we proved that people didn't even want to talk to anyone anymore, and they were willing to do this completely online, it's why they're public now. Let's just be honest, So yeah, the consumer, the only reason we have this 30 days is because it used to take that long to move, right? It takes that long to move money. It takes that long to move into a new home. You got to pack up. There's all this stuff that has going on historically. And today, look at what's going on in the blockchain world, which we could even get into. But it's once we have data that is immutable and we gather it through a secure source, all that data gathering fax a sheet goes away. And you also have very sophisticated buyers that are sight unseen saying, give me that house. We'll move in 2 weeks. We'll ship our stuff later. You have the pace of everyone has changed.
Yeah, we see it in the numbers too. We see, we see it in the Altos research data that the days on market continues to go down every single year for the last. A continuous downward trend over the last 2 decades. So the housing market is moving faster. The mortgage market needs to match that pace. So I hear the ambition, I see the vision. What have you built at Assurance? What have you accomplished in the tech stack that you are? I know it's a never ending evolution, but what have you built today, and where are you in this path toward not having a P word, a process?
Right. Yeah. So we're in exciting places. So first of all, let me just give you a little bit of history through the 4 years, because I think everybody's sort of gone through a similar process. That when I came on board, Kenny, our CEO, said, look, we're in San Francisco for 20 years, and we have these San Francisco people coming out to give us this demo on this technology called Blend. Would you sit and listen to it? And I said, oh yeah, I'm happy to do that. I was helping them with that little agency I had with their social media, sharing compliance regulation and how to do it and how often to post. This was like getting a loan officer to do social media at the time they thought that was so ridiculous, and now we do it all for them, right?
So framing was you've lived in San Francisco, you know a thing or two about tech, and we had these San Francisco people coming out. So you can speak their language.
Exactly.
Okay. Yeah.
Exactly. And they did the demo on the big screen. I was not involved with them in technology in any way at that point. They did the demo on the big screen, and I was amazing. And they were like, I don't understand it. And so I said, just tell me one thing. Tell me one thing right now. Tell me that since you're just down the road from Intuit, that you are recruiting those tax, those TurboTax guys over as fast as you can because your UI is so close. They're saying, that's exactly who we recruit from. I said, exactly. Because that's what was missing. Even, the Consumer Connect, some of the earlier POSs that did not have a UI, that people would just get lost in the application. It's too much detail.
All right. So 4 years ago, you take the Blend meeting. Was there a digital evolution roadmap at that point, or was that kind of the starting point for what one kicked off your time at Assurance, but two kicked off the development of a roadmap?
You're exactly right. It was the kickoff. They asked me to bring Blend on at the company. Okay. I said, I really, I don't need to come in house it's like field first name. I got this. I can do this as a consultant. And he said, I'm too nervous. It's too expensive. I really want you to come on board. And or someone in-house. And so I said, give me 2 weeks to think about it. I spent that 2 weeks in 2018. I had been consulting for them for about a year on the marketing side. In 2018, reviewing the entire mortgage industry. And this would have been July-ish in 2018. And I thought, wow, there is an industry left that is still this far behind. I am in, because this is what I do, is transition industries. So it was just, very, serendipitous. It was perfect for both of us.
Yeah. It's funny, how much has changed in the last 6 years. I came into to HW in 2016 and, look around and feel there's people talking about digital mortgages and this, started 20 years ago in 2000 with some digital online applications, but it was in its infancy. We just didn't know it at the time. It was so in its infancy compared to what has happened in the last 5 years. So
I told Kenny before he asked me to come on board, and after the Blend demo, I could see so I put together this end-to-end, exactly the sort of tools they would need and how it would look, and I knew how salespeople are. I knew salespeople do not like change like this. And so I handed it to him, and he was looking at it. And I was like, are you okay? Do you really want to go through, the detail of this? He goes, oh, Katherine, this is the least of my concerns. You know how much we have going on here? We're trying to launch a reverse mortgage division. And he thought this was just a little side thing we would work on. Yeah.
So were you starting to think of like building a stack around Blend? Were there other like partners that you needed to plug into the ecosystem to really start not just having a digital front end, but like continuing the digital transformation throughout the P word, the process?
That's exactly right. So, there was no doubt about it that, and this was something else being in financial services, we were working with we use Encompass. So we have this very clunky legacy system that we're trying to put a freight train on the front of it. Right. So I said, you really can't just do this point of sale system. I mean, it doesn't make sense from all of the other automation that needs to come around it to just do this. So we were going to need a marketing operating system. We're going to need, data behind everything we do. We picked up Domo. So we picked up Total Expert, and they just kind of let me keep going.
You said marketing operating system, and I knew Total Expert was about to come out of your mouth.
We won our first XP from them this year. Yes, we've done some really good work and integrations with them. They've been good. Yeah.
All right. So this is the evolution that started in 2018. But so like, how has the stack and like the strategy changed in the last 5 years? And I know like our HousingWire audience is, you're not new to them. Like I think our paths first crossed around 2018 when we were doing our engaged marketing events. And then you've spoke in 2020 and 2021 on digital transformation. And I think you even did a session on like technology priorities. And so let's talk about like the technology priorities, like what was trying to get accomplished in 2018. How did that change into the market we entered in 2020, like the beginning of COVID, and then we'll jump forward. But let's start with 2018, and then what changed from a prioritization perspective in 2020.
Sure. And I really can deduce each year to 2 words. Okay. Each year gets a word. In 2018, it was integration. It was just getting these tools to talk. Okay. In 2022, it is communication. As the pace of this will inevitably pick up and much faster. At the beginning of this year, I started a task force. And the idea was to try to discuss how we would regularly go from a 30-day mortgage to a 15-day mortgage. And of course, the ops team was like, we just closed one in 16 days last week. We can do that. But I'm like, no, I know we can do that, but not under fire, right? Like this, the norm. Nobody can move in 15 days. That was just the beginning of this year. We are already discussing a 5-day mortgage. Okay. So as the pace of this gets faster and faster, the communication must be more accurate, more excellent, and more available to everyone at the same time. So no more can we live in these days where like, oh, someone's in Encompass in my file. Let me wait. I'll come back and look at that. Like, we can't live like that anymore, right? Because if you're talking about, let's just stick with the 15-day mortgage, you better, between you, the borrower, and the ops team, I'm talking about the loan officer perspective at this point, you better be able to get what you need from everybody right now. And everybody be able to see that at the same time. We have spent since the beginning of time with Blend in this situation where, somebody goes online. We have a fantastically converting website at assuranceMortgage.com. And somebody goes online and they convert, okay, I'll just start my application here. And for whatever reason, they didn't think to go get their loan officer's link, or the realtor didn't tell them a specific loan officer. And so sure enough, the loan officer speaks with the realtor, and then the panic starts and the email to the whole company. Who has my loan? Somebody, they applied online. Who has my loan? So that's just not acceptable anymore either. Waiting a day or two to see who has the loan, who's going to, who has authorization and is in office to reassign the loan. That's just not acceptable. So what we're doing today is the big inevitable word. What's the one big thing do you think we're doing today?
I don't know. It depends on the week in the mortgage industry right now. The word of the year is efficiency and cost reduction. But
well, yes. Well, definitely we can talk about efficiency. This is efficiency, but this is not cost reduction. And that is Salesforce. There's really no way around the elephant in the room that people have Salesforce and think it doesn't work. People use Salesforce and think it doesn't do what they need it to do. And none of that is true. It's the most flexible and really the only real solution today in this industry. I'm completely open to someone else coming along because you want to talk about expensive. It is expensive, but the efficiency is absolutely unmatchable. And so it is tool agnostic, right? Got an API, it doesn't care where you come from, or a data feed, it doesn't care where you come from. You can pass data in any way, shape, and form you'd like to do that. And so we are building that out. A user experience, a new point of sale system for the borrower will live right on top of this platform as well. So in real time, the loan officer can see someone applying. They can go and check with a global search to see if someone else got their loan, and then they can get those things reassigned. If you own the account, they can handle it themselves.
Okay, I need to take notes and come back to all the things I want to hit on here. But all right, so first go back to the 5-day process. So when we talk about 5 days, are we talking about app to completion of underwriting, and how does that flow into your partner experiences or other loan requirements of appraisal, inspection, interaction with your title partners? Where does that all fit into the full timeline of the day a borrower puts their information in or talks to an LO to the day they actually walk away with the keys in their hand?
Very good question. So let's start from the very beginning. You've got a point of sale system. Who cares which one it is, as long as it gets all the data in there. You run it through a tool called Candor is probably the most ideal one, where as soon as you press, the loan officer, by the way, runs Candor, right? So as soon as that loan officer has everything in, they push it, they get an instant steps back of what it could be. They make sure that they wrap up some of those things. And so that application to clear to close can happen. Some people are up to 70 or 80% of the time, because that, as long as you have a really good application, the LO, it knows that they're pressing, running everything through AUS. Lindark, owned by Tammy Richards, is really helps encapsulate all the other pieces too. So I think we had her come in and do a consultation. That's a very good solution. It's worth, just getting rid of some of the technology that just is fluff or not really going to, like you're saying, get to a cost efficiency on the loan. That is a real goal of hers with her program, our entire platform. And then, some of these things have to be automated. Some things like pulling preliminary title report is free. We don't know that. We're waiting for the title company to come back, but that we have, lo and behold, she has that capability. Things like condo, validating the condos to get that done quickly. Auto ordering title and appraisals. Appraisals next year will have a new, new legal applications out where there will be different types of appraisals, and many of them will not require a full appraisal. Where you can just stand in front of your house and stand in the backyard and take your own pictures. And
the remote val innovation is happening very quickly.
Exactly.
Okay.
So once you get that all glued together, you're really just waiting for, docs and funding.
Yep. All right. So speed is important for borrower experience, but it's also important for cost of manufacturing a loan. And we saw, I think last month in the MBA IMB report, that the average cost of producing a mortgage or manufacturing a mortgage has exceeded $11,000, which is absolutely insane. A lot of people in the industry talk about how much the cost to originate has gone up since Dodd-Frank, but we also have this promise of efficiency from technology. So how do you think about cost of production and efficiency of production in relation to the investments you're making in platforms and solutions?
Okay, all CEOs hear this part. Everyone who knows a CEO, fast forward to this part, okay? Do not think technology in and of itself, plugged in, is making you more efficient or saving you any money. So you can't take an e-closing solution. We use SnapDocs. You can't take SnapDocs and plug it into your whole system and say, I don't know, it's not saving us any money. It's not saving us any time. Because what happens is some teams, and we did this initially, they take it on, and it's just another place to store data. They didn't change one single thing in their process. They just have another thing. So to them, it's inefficient to have that technology. Okay. So you have to decide to take on technology when you decided to work with your team to change their process. And I've been saying this from 2017 with this industry, right off the bat, guys. This is before the mad rush of COVID. Right off the bat, do not sit here and think about what technology you think I should go get based on how you do the process today. What we have to do is say, what can technology do? Let's change that process.
Well, yeah, of course, you can't like plug in a new solution and think the cost disappeared. You're taking on cost, but you have to be willing to, if you make the change in your business, and if you bring in a solution that moves data faster, or the word of 2022 communicates better, that means something else has to change the organization. Something in like staffing levels, something in planned hiring, something in another partner or vendor relationship. So you're saying that once you make the decision and find the roadmap, then you have to go do the necessary things to really realize that efficiency.
And you have to actually implement it. It doesn't matter. There is nothing personal about this process, or else don't get the tool, because all you've done is added cost to your bottom line. So imagine in 2020, when everything got crazy busy, we were buying technology and integrating like crazy. So you have vendor fees, tech solution fees, vendor managers within the company fees, right? You have all of these fees that are adding to that. And then we got so busy, we started outsourcing, right? And so then when all of that, started to slow down, we did not need the outsourcing anymore. So that's what I'm saying right now. When this gets busy again, do not think that it's going to look like 2019. It's going to look nothing like 2019. The CEO of Home Finances of America, I think that's the name. He spoke at your HousingWire event.
Home Services. Gino Blafari.
Yeah. Yes. What? Yeah. Say it.
Yeah. Home Services of America. They're Berkshire Hathaway real estate arm. Gino Blafari.
Yes.
He spoke with Tom Ferry at our CEO summit. They did a dual session.
That was a great summit, by the way.
It's really good.
Really good. So he said it. And I just wanted to stand up and clap in the middle of that room if it wasn't so intense. But he said, I'm going to tell you right now, when people ask, what are you going to do? What is your advice for all of us who are not as big as Home Services of America, right? He said, if you do not have money, you hunker down, basically put the blanket over your head, and you get through this. If you do have money, you better spend, and build that technology. So now that this has gotten really to a worse point than I believe people thought, and it would likely last longer than anyone had hoped, as the mergers and acquisitions start to happen, right? We're seeing that more and more, and people are vying for, the mid-size IMBs.
Yep, our newsroom is staying busy.
Yes, newsroom is staying very busy. Congratulations on your acquisition, by the way.
Thank you very much.
With Altos, lots of opportunities here. As that starts to happen, you really aren't going to have anyone without technology, and you really have a borrower who is quite ready. And now the expectation is that they're going to have a digital experience. When I rolled this out in 2018 and all the loan officers were very nervous, I said, guys, just send the link. Don't even worry about it, because they're not going to say, gosh, the last time I did a digital mortgage, it was nothing like this. There was no last time there was a digital mortgage. And you can just say, yeah, this is the new thing. Let's just figure it out together. Hey, check out that box. Oh, I see. I didn't check my box. Okay. Like just start. All right. Now, right. $4 trillion in business, $3 trillion in business last year. Now that everyone will have had a last time they did a digital mortgage. And so it's going to be like, you still didn't figure this out. I mean, the last one was easier. And thank goodness for Quicken Loans spending, what is their marketing budget? Like $900 million a year, right?
I think you're like the third guest in a row who's like thanked Quicken for press button get mortgage. I'm not trying to do this, folks.
Yes!
Everyone keeps thanking Quicken for their Super Bowl ads.
And for actually doing that, right? Even if they didn't do a great user experience the whole time, and you're doing that many loans, who has a great experience half the time, right? We almost have the same NPS score, Net Promoter Score, and they have, quadrillions of loans, and we don't. But the point is that they are paying to train the market. That is one less expense. If you're trying to create a tool, let's say you're trying to create Facebook, and you say, I want to create this social media platform where people are going to wake up and the first thing they're going to want to do is open up their phone and see what their friends are doing. That would have been crazy talk before Facebook, right? It's like, that is the last thing. I got to get to work. That is the last thing. So to change market behavior is extraordinarily expensive. And then when it happens, it's contagious. So they paid that path to change the market behavior, that we didn't have to convince someone it is safe to put your information in this digital application. We didn't have to do that. So it is, now we are just catching up.
I mean, that's like the direct correlation, like what the early innovators in mortgage did. They trained the market, but the insurance companies also trained the market. Depository banks also trained the market. Amazon, Carvana, they're still alive. They've all trained the market on so it's the experiences that required us to step into a digital evolution also paved the way for consumers being willing to go through the digital process. So you mentioned having to kind of push, for the folks that are listening and not watching on YouTube, like pushing the loan originators into using the link. So how has the digital roadmap and evolution changed the culture at Assurance in the type of LOs that excel and thrive on the platform and capabilities that you're building?
This to me is one of the most exciting benefits that can be more immediate to see, because the evolving your current process with people who are already in that process is always a little bit of an uphill road, right? Yeah. I believe I have shifted from being the most hated person in the company to one of the most appreciated, at least. I don't know if I'm loved at this point, but I'm certainly appreciated, because now they get really excited. They know they can trust me, that I'm not, everything I've said has come true, that we're there. But the new loan officers are either leaving their company because they were with a big broker who was never going to adopt this type of technology, right? Or they're younger. Finally, we're starting to see some younger people get into this industry, and they just kind of expect it. Yeah. But as they are interviewing with other places, we have a super cool intranet called the Hub. And so we have single sign-ons to these technologies from the Hubs. We have, quick demo trainings for them. We have a Make More Money Monday where we teach them how to use these tools on Monday afternoons. There's a lot of resources for them for the technology. So again, you can't just dump it in people's laps. When these new loan officers come in and see not only what they have access to, but the training and hands-on to help them evolve, the industry is evolving. The industry is evolving. They're just like, we had nothing like this where I was. So.
That's cool. One of the things, it's exciting to hear about younger and new loan officers coming into the ecosystem. One of the things that kind of scares me about the market we're in right now is we've seen a lot of originators start their career in a extremely low rate, extremely high margin. Margin. What am I talking about? We are high margin, but high volume market. And the same on the real estate agent side, where the transactions were just happening without learning the basics. Do you feel that some of those new originators are gonna muscle through this low volume environment that we're in right now? And are you fearful that they'll kind of run toward greener pastures instead of stay through in this industry that we know is long-term fruitful, but still cyclical?
That is very much dependent. That is certainly the question of the day, Clayton. And it is very much dependent on the regional sales managers, because you have today, especially, you have to weigh your options. The job market is terrible, right? Regardless of what good news they try to drum out of the job market, it's terrible. So you need to make money. You need to feed yourself, your family, whatever it may be. And so you have an option to make, let's say that you have to make $60,000 a year. Well, how much business do you have to do to make $60,000 a year? Last year, you might would have made $250, even being new, right? But let's just say this year, you have to make 60. Well, where are you going to get a $60,000 job? Where are you going? And I think the other side of it is if they can, hang in here, there are many people who will fall out of the market. That is always the case. They just don't understand commission only, situation, and they get nervous and leave for the new ones. But then I do believe there will be a greater transition to a consumer direct model. Again, do you go online and say, I need to fly to New York Would you like to find the nearest location to book your flight, or would you like to book online? Get started and we'll call you to book your flight. You just go and book your flight, right? So this is where this is headed. It's like credit card. It's like everything else. And again, the faster it can be, we can talk about marketing, the very nuanced conversations that will go on with that because of the relationship time you have with people. But that means that the LO will have less relationship time with them too. So even if we had all traditional loan officers, if you did close loans in 5 days, you haven't established this big, huge rapport that they're just never going to forget you, right? When they do this 4 years again later, that other than hopefully you're doing great marketing, that they're, and good alerts like sales boomerang, where you're really watching their life behavior. If you're not taking advantage of the new tools that are out there and regularly sending mortgage coach quotes. When people are like, I'm not really sure if I need mortgage coach now because it's, I have to pay for it and I don't have very many loans. I said, well, here's what you do with mortgage coach. Yeah. You send what they got in 2021 or 2020, and you send them what their loan would be today and say, thank gosh, you bought that home. I knew it was good timing for you. Lucky you. Look at where you'd be today. That is something that he will show his friends. Look how much money I could have never even bought in this market. Give him something to be proud of, So as the transition goes to consumer direct, not entirely, that will never happen either. There are still life insurance salesmen, right? You can walk up to, and there are still travel agencies you can go to. But as the large shift goes to consumer direct, some of these people can shift into those roles too.
I think the conversation about the evolution of consumer direct makes a lot of sense as we talk about technology evolution capabilities. But from what I'm seeing in the data is that the market-facing retail originator who's been purchase-focused, has realtor and referral relationships, their volume is holding up much better in this market than many of the consumer direct players. And I know there are outliers out there. But consumer direct, particularly lead-driven consumer direct, has really had a tough run in this rising rate environment. Do you think there's a different iteration of consumer direct that we expect in this cycle or post cycle, or do you think I'm missing something there in that kind of categorization?
Well, I'm going to be really frank with you, Clayton. I think that this difficult market is the best thing that could have ever happened to consumer direct.
Well, because it shook the dependence off of web leads, or what?
Well, it shook the poor customer service excuses up. It's wake up and remember that you're servicing a client for the largest transaction they likely will ever do, that you're helping someone find a home for their children in a school district where they will learn. And when the typical, that's how, look, this was the same thing in life insurance. Pound the phone, 100 calls a day, hurry up, get them, call them, text them back and just send a rate over on text. And just that madness is just unacceptable anymore. And when you're very stressed about whether or not this is a good time to buy, particularly, what do we have? A lot of millennials coming on board. They are very confused by all this messaging. They know how to run a mortgage calculator online. That's not what they need help with. They need help understanding. And I know, if you got that through your guy on the phone for your investments, right? You're like really determining whether or not you want cryptocurrency. You cannot today go sit in someone's office down the street and discuss your do you want to do Bitcoin? Is Ethereum really going to come back? You
How wild would that be? How wild would that be?
How wild would that be, right?
You never even think about it. Even though I think there's still like Bitcoin vending machines somewhere, I'm pretty sure that's
there are. There are. Yeah, the crypto world is quickly changing. But you're making, a lot of people are making big decisions in crypto. So you would have to get on the phone. Now, there are places you can call on the phone, right? And you're getting really sound advice. They're taking care of you. They're teaching you how. They're screen sharing. They're walking you through the wallets. I mean, this is a much more complicated transaction for all intents and purposes than a mortgage, because the actual technology experience is more challenging than what we typically put a borrower through. So, today, I think it's great that the traditional loan officers can have a little confidence that they are highly needed, and the consumer direct teams can completely reinvent their purpose.
So like a reinvented consumer direct, I know a lot of organizations have broken out purchase consumer direct and refi consumer direct. Are you kind of describing a culture and experience that looks more like a purchase consumer direct shop that also does refi, where I think the refi shops, and not just shops, I'm not categorizing a whole lender. I'm kind of categorizing, like, I know there's consumer direct lenders who put their refi teams elsewhere. And like, is that what changes?
Well, remember, we're evolving as an industry. So, I don't know why, like I had one branch manager who I just loved to death. And for some reason, he decided to get licensed, even though he lives in one state. We won't name which branch manager, we won't name which state. And he decided to get licensed in a bunch of states. And he lives in the South. And he said, hey, Katherine, I know you handle consumer direct. So I'm licensed in California now. So just send me all the California leads. Oh, look. You decided all of California, it's coming to you, So the territorialness, yeah, he's crazy to not ask. I completely agree. Florida too. He wanted Florida too. So, the territorialness just around where they are, is sacred. They've spent a lot of local money. They've, sponsored lots of everything from local teams to, big events to all the realtor deals. It's like somehow or another, there has to be some, rolling equity that comes with all of that expense in marketing over the years. So that's a challenge. But then going even wider than that, well, I'm licensed and I was here first, so the main thing that has to happen is there has to be a very, very clear line in the sand for how the company chooses to handle it. And you have to be willing to let go of the loan officers that just might not jive with how you've decided to grow your business. And that's just the bottom line, because ultimately they won't be able to go anywhere and have that sort of territorialism anymore. But that's an evolution. That's not next year. We'll still be very happy they're hanging with us, next year, and always have. They can always hang with us. The question is how to do the business. And we have not really had a lot of control. For instance, through Salesforce, there's some really cool tools that have come out where you can, while you're in the consumer account, you can just pop open a little tab, a little gift center tab, and send a little $5 gift card to Starbucks. You can, send your nice closing gift at the end. The milestone can prompt you with suggestions to send certain things. And it's not, there was a big survey that was done that said borrowers, only 4% of them care about that closing gift. I have loan officers that are full of bags in their office with all their closing gifts that are the most important closing. Everyone loves those gifts. That's the one I have to use. That's why they're going to come back in 4 years. They're going to remember that salt and pepper shaker that has our logo on it. Right? Like, are you really putting a salt and pepper shaker with our logo on it on your table? But whatever. To them, it's important, and I understand that. But wouldn't it be awesome as the marketer to control the experience between the company and the loan officer and the borrower, where as soon as the loan gets locked, they get a $5 gift card that goes from Starbucks and says, have a cup of coffee and take a load off. We've got it from here. So, oh God, that's kind of nice, And then they reach, clear to close, and they get to select their closing gift because it's coming. And if the appraisal came back low and there's just a real challenge there, or the rate they could have left but they didn't, there's some discretionary opportunity to tangibly engage with people in a way that even traditional loan officers are not doing today. And so when I say reinvent, I don't mean how do we take this traditional conversation where you care and put it on the phone? I mean, how do you surprise and delight the borrower? They're like, these people have got me, and I know when I call in, it doesn't even matter who picks up the phone. I don't have to wait for someone to call me back because they're answering my question right now.
That's phenomenal. So Katherine, you mentioned that we're not fully anticipating like smooth sailing in 2023. The market might be harder, longer than anybody anticipated. And we're definitely not asking you to make interest rate forecasts for 2023, but how do you prepare the business with caution and prepare the roadmap with caution and prepare your loan originators for a year that we're going to have to keep working really hard to bring every loan through the door and keep earning more and more? Like, how do you prepare the strategy for 2023?
Yeah, it's a big one. I think most people in the C-suite for 2023 are feeling like you're damned if you do and you're damned if you don't, particularly with the technology, from that perspective. And the motivation has to come from the confidence that you've got them, right? Like I have got you no matter how you want to present yourself to a customer. If you want to present yourself through a traditional marketing flyer, and we have a biz box where you get this surprise little tchotchkes to hand out to people, and then we're going to continue that for you. But at the end of the day, you are a self-sourcing individual. And what we're going to do is wake up every day and help you, give you what you need. But if you go and take the time, this is the greatest thing loan officers have right now is time, and learn these tools, learn how to put life events into Salesforce, learn how to have a conversation that lasts longer than the right now house. You can reinvent yourself in a way, because guess who's left? Exactly like what you said. All these people are going to leave the industry, right? Guess who's left? The best. This is what they were already doing without the savvy technology tools to help them do it.
Oh, there's a cream rising happening right now in loan originators, in mortgage banks, in real estate agents, in tech companies. There is a cream rising. Like, this industry will be better on the other side of this.
Completely agree with you. But they now have tools that some people may not. Mm-hmm. You know, if you have someone who's done this a really long time and is successful and they're older, guess what? So is their database. So, you know, surprise and delight these people. Learn how to use these tools. Learn how to use alert strategy, and be engaged in their lives.
Perfect. Katherine, thank you so much for joining us today for this episode of Housing News.
Happy to be here. Thank you, Clayton.